Alright, so now let's go on to the short setup entry rules, which is basically the opposite. So again, before taking a trade, ensure that you've got the 4 conditions. And condition number 1 is you must see the currency pair on a downtrend from the 50-minute candle time frame. So again, there are 2 conditions. Number 1, the moving averages must be in a downtrend sequence. Again, the 18 EMA below the 50 and the 50 below the 200. Next, we want to see the current swing low, or rather, sorry, the current swing high lower than the previous swing high. So again, looking at this graphic over here, you can see um, the current swing high, which is where we're going to enter, is lower than the previous swing high. Next, the current swing low must be lower than the previous swing low. So again, the most current swing low is lower than the previous swing low. So once again, you must see this lower high and lower low pattern before being convinced that it's going to be a downtrend, or rather, it is a downtrend. Next, once you have looked at the 50-minute candle time frame, check the hourly candle time frame to ensure the moving averages are also in the downtrend sequence, 18 below 50 and then below 200 moving average. Next thing to ensure is that before you enter short, the price at the current swing high is facing some kind of a resistance, a reliable resistance level. So this resistance can come from either a moving average, the price hitting a moving average like the 18 or the 50 moving average, or the price is at a Fibonacci level, 38.2, 50% or 61.8% Fibonacci level. So again, the way you draw the Fibonacci would be from A to B. So AB is the most recent impulsive wave, and point C would be where you're going to enter. So C should be, again, a Fibonacci level. Now, once you've got those 3 conditions, you're looking for a trigger. You're waiting for a trigger to appear. So you either wait for a bearish engulfing pattern, which is over here, or you wait for the price to consolidate for 4 candles or more, and they should be relatively small candles, like so. So once you have got all the 4 conditions met, you're good to go, and you place your entry order. So first would be to place a sell stop order below the bearish engulfing pattern, or you place the sell order right below the consolidation pattern. Round it to the nearest pip plus the spread. So if the spread is half a pip, then put it down by half a pip. If it's 1 pip, put it down by 1 pip. Okay, so again, what we want to do is we only want to enter the trade if the price goes down in our favor. So we use a sell stop order. Remember, sell stop orders are used when we want to sell below the current price. So the price has to move down to trigger our sell order. Now, in those instances where sometimes by the time you look at the setup, you've already missed the bus, right? The bus has already moved down, and you're at a bus station. So again, like I said, don't chase the bus. In those situations, you would put a sell limit order. So remember that a sell limit order is selling higher than the current price. So if the price has already moved down, you want to wait for it to come back up to the intended entry price, use a sell limit order. Okay. Now at the same time as you place your entry order, you place a stop loss just above the current swing high. So that means it's just above the bearish engulfing pattern or above the consolidation pattern. Right. So right here, right above the current swing high. Okay. So again, from the entry price to the stop loss, that would be known as the 1 hour distance, and it should be at least 8 pips. If you don't have at least 8 pips, move your stop loss higher to get at least 8 pips. Next, you place your target price 2 hour below the entry price. So again, if your stop loss is 8 pips, you aim for 16 pips. Now again, there are times when you may not aim for 2 hour, you may aim for 1.5 hour as well. So anything from 1.5 hour to 2 hour is fine. Remember that in the long run, as long as your average win is more than your average loss, when you lose 1 hour, and you win more than 1 hour, you are going to be profitable. Okay. So usually what I like to do is, if I'm entering the trade over here, okay, my target price would be at the most recent current swing low or right below that, right? So my target price will be somewhere over here. Now, how much lower? Again, what I usually do is I'll compare the current swing low to the previous swing low. So for example, if the current swing low exceeded the previous swing low by say 5 pips, then the most I would allow myself is to have a profit target five pips below the current swing low, right? And I need to get at least 1.5 to 2R, right? So again, what are some low risk filters? Do not enter a trade if there's major red news to be released in the next 2 hours. So again, check your Forex factory every morning before you start trading. Mark out the major news events. And again, once you enter the trade, you allow it to hit the stop loss or the profit target. Now, if the red news is coming up before your trade is concluded, I would suggest you exit the trade before the news is released, right? All right, so let's look at a few examples of the short setup. First is the pound dollar, and again, we are looking at the 15-minute candle time frame, and the entry was right over here. Okay, so again, do we see a downtrend pattern? Right, notice that the moving averages are in the downtrend sequence. Notice that we have got the lower highs and lower lows. This is the previous swing high. This is the current swing high. All right, so it makes lower highs. And this is the current swing low, and that's the previous swing low. So again, we have got lower highs, lower lows. So we need to always have that pattern. Okay. Boom, 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 enter. All right. So at this point, at the current swing high, are we convinced that it's already the top of the swing high, that it won't go higher, right? So we need a reliable resistance level. So in this case, what is the resistance? It is the 50 moving average. So notice that the price is finding resistance at the 50 moving average, right? Here we go. And we are waiting for a trigger candle. So in this case, what has happened is we have got this big red bar, red candle that engulfs this green candle. So that's a bearish engulfing pattern. So once we see that pattern, we say, okay, that tells me that it's going down. Likely, I can place my sell order right below the low of that bearish engulfing candle, plus the spread, okay? So in this case, my sell order would be 3485 right there. My stop loss would be the high, just above the high of the whole pattern, right? The above the swing high. So that's a swing high, stop loss at 3498. So from 3498 to 3485, it's 13 pips. So my risk is 13 pips. You know, if I want to aim for 2R, I'll aim for 26 pips, for example. Okay. So again, always check for the hourly candles to confirm your trade. So you can see that on the hourly time frame, we also have the moving averages in sequence. 18 below 50, 50 below 200. So once you enter the trade, so the next candle opened and went below the low of this bearish engulfing candle. It triggered our order at 3498 and proceeded to hit our profit target at 3459. All right, so again, was 1 to 2 risk to return ratio. So this was on the pound dollar, right? It's a bit of typo here. So it's pound dollar on the 11th of January. All right, so this one is the Euro US dollar pair. Okay, so again, entry was over here, very similar looking. Okay, so again, do we have our downtrend sequence? Check moving averages in sequence. Do we have our lower low and lower highs? Right, so there we go. Boom, 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 boom. Okay, so current swing high lower than previous swing high. Current swing low lower than previous swing low. So we see that pattern over there. Lower highs, lower lows. All right. And again, at this point, do we have a reliable resistance? Yes, it is hitting the 50 moving average. And again, you can check, is it also a Fibonacci level, right? If you check, notice that it is also a Fibonacci level. If you take the start of the impulse wave A, connect to B, all right, so that's A, B, C, that is the 61.8% Fibonacci level, right? So this is a strong resistance, 61.8% and a 50 moving average, all right? So we have a bearish engulfing pattern, so we have our trigger. We can take the trade. So again, sell order right below the low of the bearish candle, 2205. Stop loss right above the high of the bearish engulfing pattern, right? Or right above the current swing high. So they'll be at 2216. So 2216 to 2205, that is 11 pips. So that is our 1 hour distance. So again, we're risking 1 hour to make 2 hour, for example, or again 1.5 is fine as well. So we're going for a 2 hour, in this case 22 pips. So as you can see, after entering the trade, the next candle went below our entry price, so it triggered our sell order. Okay, but didn't go down immediately, right? See, it's triggered the sell order, it went up again, and then boom, it went down to hit our profit target at 2183. So that was again another short trade. Let's take a look at another example. So this is dollar CAD. So again, once again, get familiar with looking for the pattern. So you can see in this case, what was the pattern? Again, downtrend pattern, moving averages in sequence. We have our boom, 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 boom. There we go. Right? So lower highs, lower lows. You always want to see lower highs and lower lows. So current swing high below previous swing high. Current swing low below previous swing low. So clear downtrend pattern. And again, right at this point, at the current swing high, we want to see it's a reliable resistance. Now, in this particular case, notice that it is not at the moving average. It is not at the 80 moving average. It is not at the 50 moving average. So what is the reliable resistance? Well, it is the Fibonacci level. So again, if you take a look, you draw your Fibonacci from A, the start of the impulsive wave down, to B, the end of the impulsive wave. So A, B, and then C would be the current swing high. So you can see it's exactly at the 50% Fibonacci level, right? So again, either at a Fibo level or at a moving average resistance, or both. That would be, of course, ideal. So once we have got that, we wait for a trigger pattern, and the trigger pattern is a bearish engulfing pattern, right? So you can see this red candle engulfs the green candle. We have our pattern, so we can place our sell order right below the low of that. In this case, it is 2771. Our stop loss at 2779, so that's 8 pips. And again, our profit target would be 16 pips, which would be at 2755. So let's take a look at this trade. Right, so what happened was the next candle here, this one, triggered our sell order. So it went down, didn't hit the profit target, went up, went down, went up, and looked like it was going to hit the stop loss actually, and then proceeded going down and hitting our profit target, right? So that's why I always tell people, once you place your order and it gets filled, close your computer, do something else, because if you keep looking at it going up and down, you go nuts, all right? It goes up, you get excited, goes down, you get upset, or so and so forth. So very emotionally draining, and you can't move it by looking at it. So remember that every time I take a trade, to me, I never know if it's going to be a win or loss. To me, it's like tossing a coin. I know that in 100 trades, I'm going to get half right and half wrong, for example. It's fine, because when I get right, I get 2 hour, I get wrong, I get 1 hour, and I'm going to make money at the end of the day. So, don't be concerned about, the minute fluctuations. Just set and forget. That's the best way to trade Forex, set and forget until the trade is resolved. Okay, so I just entered a short trade on pound Canadian. So you can see over here, let's take a look at the price action. So over here you can see that it's on a downtrend pattern with the 18 EMA below the 50, 50 below the 200 moving average, right? And we have got the lower highs and lower lows pattern. Let's take a look at that. So that's the lower highs, right, and the lower lows, right? So price is making lower highs and lower lows. So the current swing high is lower than the previous swing high, and the current swing low is lower than the previous swing low, right? So we've got that pattern over there. And checking on the hourly candles, H1, again you can see it's on a clear downtrend as well, right? With the 18 below the 50, 50 below the 200 moving average, right? So as the price went down, this is the impulse wave, right? And it rallied up to the moving average that acts as a resistance, right? The 18 EMA, and it's actually a Fibonacci level. If you draw from the start of the impulse wave A to B, right? So A, B, C, you can see that it's at the 50% retracement level. So it is a reliable resistance because it's a 50% retracement, and it's also the 18 EMA, right? So once we have got that, we're looking for a trigger price action. So we had a trigger price action, which is after this swing high, we had this bearish engulfing candle, right? So you can see this bearish candle, the body engulfs the bullish candle. So that is our trigger. So we place a sell stop order just below the low of this bearish candle. So that's my sell order, which I placed at 7260. So that was a sell stop order. And my stop loss is right above the high of the current swing high, which is 7279. So again, this is my entry price, and that's the stop loss, right? So in this case, the 1 hour distance is 19 pips. Okay, so my profit target is somewhere over here, right? This red line that you see, profit target's at 7222. So that is a 2 hour profit target, which is about 38 pips profit target. Okay, so the trade was already placed a couple of minutes ago, or you can see it's running right now. And what happened was, after I placed the order, the next candle that appeared, it went below the low of the bearish candle. So it triggered the order because it's a sell stop or triggered the order, and now it's kind of like consolidating here. So again, we'll see what happens, right? It could move up to hit the stop loss and could be a losing trade, or it can continue to go down as I anticipate to hit the profit target. So it's too early to tell what's going to happen. Once you enter a trade, remember, anything can happen, and nothing's over till the fat lady sings, which means it either hits a stop loss or the profit target. So we'll come and see what happens to this trade. Okay, so let's take a look at some of our trades. So the first trade I got into was pound Canadian. As you can see, my entry was the green line, and my stop loss is here, my profit target is here. So you can see that it's almost halfway to the profit target. You can see the running profits over there. Okay, and so that's for pound Canadian, right? Okay, so I'm going to take a trade right now on pound Aussie short bound. So I'm going to put a sell stop order right below the low of this candle, this bearish candle, which is 7960, 1.7960. Quickly put a stop loss at 1.7978. So there we go. So double check my order. Okay, so my entry is below the low of this candle, 7960. And again, let me just double check. My stop loss would be, actually, I'll just give it another pip, 7979. just do it rough. So it's 18 pips above my entry. So 7978. So that's correct. Yeah. Okay. Great. So I'm going to put a profit target about 2R below. So I'm risking about, let me see, I'm risking 18 pips. So my target price will be 36 pips below my entry price. So 7960 minus 36 pips would be 7924. Oops. Just double check. Okay, something's wrong with that. Let me see what happened. Okay, there we are. So we're in. All right, good. So as you can see, my trade has been triggered. The price is going down. And I got triggered at 7960. My stop loss is at 7978. Profit target 7924. Okay. So again, this is my risk, 1R, and that's my target of 2R. So I'm risking about 18 pips to make 36 pips. There we go. All right. So again, let's take a look at why I took this trade. So this is a trend continuation trade. So for trend continuation, I always look at this pattern like that. Okay, so price makes lower highs and makes lower lows. So you must see two lower highs and two lower lows for it to be a valid pattern. So it goes like that, up, up, and you continue the trend down. All right, so you got two. So this current swing high is lower than the previous swing high. The current swing low is lower than the previous swing low. So we've got to have that pattern, right? At the same time, notice that the moving averages, as you've learned in the program, they are aligned, okay, where the 18 below the 50, below the 200. And also checking the hourly candles. You can see on the hourly candles, the trend is also down. So we always need to look at multiple trend alignment. So once we had that pattern, right, I'm looking for a trigger. So the trigger in this case is the bearish engulfing pattern. So this bearish candle, the body engulfs the previous bullish candle. So once we've got a bearish engulfing pattern, we can take the trade, right? So we place our sell order just below the low of the bearish candle, the stop loss just above the current swing high, all right, and that will be our 1R risk, which in this case is 18 pips. And then our profit target is 2R down, okay? So once I place the trade, I'll wait for it to hit the stop loss or the profit target. Let's see what happens. Okay, so following up on our trade on Pound Aussie, as you can see, we entered the trade a few minutes ago. In fact, we entered it about 20 minutes ago, and right now it's almost going to hit our profit target. We're just a few pips away. That's the running profit you can see over there. So entry was here, stop loss was there, profit target's here, and looks like this will be another winning trade. So now that you've learned this strategy, common question people will ask would be, so how do you look for trade setups? And again, you know, almost every other day you have these trade setups coming up. And one thing that you can do is to plan it around your day job, if you do have a day job. So for example, you work from 9 to 5. So obviously from 9 to 5, you don't trade because you're working, right? And what you can do is maybe after 5 or say at 6 p.m., from 6 to say 10 p.m. every day, you can take a look at the market for these trade setups. And you don't have to stare at it like every minute, right? In fact, you can just look at it every hour or so. Because when you look at it, look at the market, you can tell if it's kind of like forming that lower high, lower low, or higher low, higher high. And if it looks like it's forming, and then you can again, take a look at it more frequently and see if you have got that trigger candle pattern, and then you take the trade. And if you don't see anything forming, then obviously you don't have to look at that particular chart. So what I do is on my MT4, I've showed you previously, I've got all these different pairs, and I just take a quick look through all the charts looking for that pattern every hour or so. Okay. One of the things that one of the ways I also get a lot of trade setups is through the Telegram chat group. So you can see this is I've got many chat groups, by the way, and this one is on Forex. So we've got currently about 169 members who have taken the class, and it is so vibrant because almost every few minutes we have got students who are chatting, who are sharing ideas. So I've got some students who are trading full time. Literally, they're looking at the market like 18 hours a day, right? So the moment they get they see a trade setup, they would put a signal on the Telegram chat group, right? So the moment they post a signal, my other students and myself, we would comment and we say, okay, is it a valid signal? It's an invalid signal. And every time you see a signal, you want to share it with the rest of the group. Number one, because when you share with them, they will share with you as well. And when you share with them and it's not a valid setup, you also get instant feedback. And they'll say, don't take this trade because there's no lower highs and lower lows, right? So we've got this really vibrant community where we really help each other to find these trade setups every single day. You can see, for example, on a typical day, you can see that's me, Adam Koo, and I hit my target profit for New Zealand yen, and I said, thanks for the alert, because I didn't see it. It was found by one of them, and this guy called Pisef, all right? Pisef is from Cambodia, So you have got traders from all around the world, from the US to South Africa to Cambodia, and they're looking at the markets and they're sharing every single day, all right? So once you're in the advanced class, you'll be part of our Telegram chat group community, and you'll be part of the whole sharing process as well. And of course, you can also, through the Telegram chat group, ask questions about the strategies, and we will all help each other to become really successful traders. Okay, so that concludes the trend continuation entry strategy of lesson 2. Thank you for listening, and I'll see you in the next lesson.